right now, at this exact moment. Silver is vanishing from the global system, not slowly, not quietly, but fast enough to trigger stress signals that haven't appeared in decades. Silver just traded above $63 an ounce. China intervened, margins were hiked, paper markets panicked, and physical silver kept moving higher anyway. Watch until the end, subscribe, and remember, this is not financial advice. Because what comes next will change everything you thought you knew. This is not just a price move, this is a structural break. For years, analysts told you silver was boring, oversupplied, irrelevant, a relic. They were wrong, and here's why this time is different. The silver market you see on your screen is not the silver market that actually exists. What you're watching is a derivatives market, a paper reflection, a shadow. The real market is physical, bars, coins, industrial contracts, strategic stockpiles, and that market is breaking free. Here's where it gets worse. Silver almost entered backwardation. That means the metal today was priced higher than the promise of metal tomorrow. In commodity markets, that is a red alert. It signals stress, urgency, scarcity. This doesn't happen in healthy systems. And yet, even as China raised margin requirements by more than 20%, silver refused to collapse. That move was designed to crush leverage, to force selling, to cool speculation. Instead, silver rallied. That's not normal. That's what happens when physical demand overwhelms paper control. Now here's where the pattern becomes alarming. In a single day, over 1 billion ounces of paper silver traded on Western exchanges. One day, 1 billion ounces. That's more silver than the entire world mines in a year. Ask yourself a simple question. Did 1 billion ounces of silver change hands physically? No. This was synthetic supply, used to suppress price, used to maintain illusion. But illusions fail when reality pushes back, and reality is pushing back hard. Let's talk about the data. Global silver production is roughly 800 million ounces per year. That's it. That's the ceiling. Now look at demand. Industrial usage alone is consuming more than half of annual supply. Solar panels, electric vehicles, AI data centers, 5G infrastructure, military electronics, guidance systems, advanced radar. Silver is not optional in these systems. There is no substitute at scale. Now add investment demand, coins, bars, private vaulting, centralized accumulation. And then look at inventories. Comex registered silver has been draining for years. LBMA vaults show repeated outflows. Warehouse stocks are lower than reported because much of what's listed is already spoken for. Now here's where it gets worse. Silver deficits are no longer theoretical, they're measurable. Recent years have seen deficits exceeding 100 million ounces annually. That means demand is outpacing supply every single year. You cannot run that imbalance indefinitely. And now China enters the picture. This is not a coincidence. This is positioning. China understands commodity warfare. They lived through it with oil. They mastered it with rare earths. Now they're moving into precious metals. Chinese distributors are reporting total silver sellouts. 5 metric tons gone in a single day. Lines forming in the rain. Physical delivery prioritized over paper promises. At the same time, Chinese entities are acquiring mining assets globally. Gold, silver, strategic supply. This is not about speculation. This is about control. When China raised margins, Western markets expected collapse. Instead, silver held and rallied. That sent a signal. If margin hikes no longer suppress price, the paper market is losing power. And that's when numbers like $235 an ounce stop sounding crazy. Now let's step back. We've seen this before. Dependency, weaponization. Crisis, realignment. In the 1970s, the world depended on oil. Then oil was weaponized. Embargoes followed. Prices exploded. Entire economies realigned. In the early 2000s, the world depended on Chinese manufacturing. Supply chains were optimized. Then leverage appeared. Trade wars followed. Realignment began. In the 2010s, the world depended on rare earths from China. Exports were restricted. prices surged. Supply chains fractured. Now, look at silver. The world built a technological civilization on it, electrification, digitization, automation, but supply was neglected, underinvested, assumed abundant. Now demand has weaponized dependency, and we are entering crisis. This is where history becomes a warning. In 1980, silver spiked as physical demand overwhelmed control. The gold-to-silver ratio collapsed. Silver nearly hit $50 with far less industrial demand than today. In 2011, the pattern repeated. Financial stress, monetary expansion, silver surged again. Today, the gold-to-silver ratio remains historically distorted. If it merely reverts to past norms, silver triples. If it overshoots, silver explodes. At a gold price north of $4,000, a return to historical ratios implies silver between $120 and $230 an ounce. That's math, not hype. Now make this personal. Silver is in your phone, your car, your power grid, your medical devices, your military defenses. If silver shortages worsen, electronics get more expensive. Energy transitions slow. National security costs rise. Your cost of living doesn't rise because of silver prices. Silver prices rise because the system is strained. And when strain turns into panic, prices don't move gradually, they gap. Now, look ahead. 18 to 24 months. Scenario 1. Escalation. China continues accumulating. Western inventories drain. Paper suppression fails. Prices spike violently. If this happens, the consequences could be immediate. Scenario 2. Strategic response. Governments intervene. Recycling mandates increase. Stockpiles are revealed. Markets stabilize temporarily, but control is never fully regained. Scenario 3. Global realignment. New supply chains form. New pricing mechanisms emerge. Physical markets dominate. Paper contracts lose credibility. This is the most disruptive outcome, and the most likely long-term. Now here's what to watch in the next 90 days. Watch inventory reports, not headlines. Watch backwardation signals. Watch margin changes. Watch physical premiums. Watch China's acquisitions. And most importantly, watch what doesn't happen. If silver refuses to fall during engineered sell-offs, the game has changed. Because when manipulation stops working, price discovery begins. And price discovery in a structurally short market is not gentle. Silver is not just moving, it's escaping. Subscribe and turn on notifications. The next chapter is already unfolding.